How is the multifamily real estate market shaping up in Seattle, and what does a $400,800,000 acquisition signal for the future of commercial real estate? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Security Properties has made a significant move in the Seattle real estate market with the acquisition of a 903-unit portfolio. This transaction, valued at $400.8 million, marks the largest real estate deal in Seattle this year. The portfolio comprises properties that are described as newer, nicer product developed in the last decade, highlighting a trend towards high-quality multifamily developments. This acquisition underscores the continued demand for multifamily properties in urban centers like Seattle, where the focus is on modern, high-standard living spaces. The transaction is a strong indicator of investor confidence in the Seattle market, which is known for its robust economic growth and dynamic real estate landscape. In comparison, when looking at the multifamily market in regions such as Kitchener-Waterloo and Cambridge in Ontario, we can see a similar trend where high-quality, newer developments are attracting significant investor interest. These areas, like Seattle, benefit from a strong tech presence and a growing population, making them desirable for real estate investors. This cross-border perspective shows the universal appeal of investing in multifamily units, especially those that promise modern amenities and are situated in economically vibrant areas. As urban centers continue to grow and attract diverse populations, the demand for such properties is likely to remain strong on both sides of the border. In a notable transaction within the commercial real estate sector, United Parcel Service, commonly known as UPS, has sold its Alpharetta office building to a New York-based investor for $93 million. This office building, which houses UPS's Supply Chain Solutions division, represents a strategic move by the company amidst a period of declining revenue reported in the last quarter. The sale of this office building is a significant event in the Alpharetta real estate market, reflecting a trend of large corporations divesting real estate assets to streamline operations and generate liquidity. The transaction provides UPS with a substantial cash infusion, which could be pivotal for the company as it navigates through its current financial challenges. Interestingly, this move mirrors a broader trend seen in both Canadian and American markets, where companies are increasingly leveraging real estate assets to bolster their financial standing. In regions like Kitchener-Waterloo and Cambridge in Ontario, similar strategies are observed as companies optimize their portfolios to focus more on core business operations. This transaction also highlights the attractiveness of office spaces in strategic locations such as Alpharetta, known for its growing tech scene and corporate presence. For investors, these markets offer promising returns, especially when aligned with the broader economic growth of the area. As companies continue to adapt to changing economic landscapes, the divestment of real estate assets is likely to remain a viable strategy for maintaining financial health and operational efficiency. This trend underscores the interconnected nature of real estate markets across North America, where similar economic forces shape both Canadian and American commercial real estate landscapes. Continuum Development has made a strategic acquisition in downtown Evanston, purchasing the Church Street Plaza for $31.2 million. The site, located on Maple Avenue between Clark and Church Streets, is set to undergo significant transformation with plans for a 27-story, 358-unit residential tower. This development is seen as aligning with Evanston's inclusionary housing plan and sustainability goals, according to Evan Meter, co-founder and managing member of Continuum Development. The previous owner, Mitch Goltz, had initially explored the idea of a high-rise on the site in mid-2024, but felt that the scope of the project was beyond his firm's current capabilities. Goltz had acquired the plaza, along with 2 additional properties, for just under $30 million in 2021, at a time when the plaza was mostly vacant. His efforts have since revitalized the location, attracting new tenants and increasing its appeal. The proposal for the new high-rise has not yet been presented to any city panels, and it has faced some criticism from local residents. However, Continuum is confident in the project's potential, backed by a $26.5 million floating rate loan from T2 Capital Management. The plaza, which was originally built in 2000 and redeveloped in 2023, covers a full city block and is almost fully occupied with tenants, including a 12-screen AMC movie theater and Sky Zone Entertainment Park. This acquisition highlights the ongoing interest in mixed-use developments that combine residential and retail components, especially in high barrier-to-entry locations like downtown Evanston. The move by Continuum reflects a broader trend in urban real estate markets, where developers are seeking to maximize site potential by introducing high-density residential units in areas with strong community ties and existing commercial infrastructure. In a significant development in the hospitality and real estate sector, the Virgin Hotel Chicago, located at 203 North Wabash Avenue, is set to undergo a transformation into a Sports Illustrated-themed urban resort. This initiative is spearheaded by Travel Plus Leisure, an Orlando-based vacation ownership company. The new resort, which will be the third in the Sports Illustrated Resorts chain, is planned to open late next year, with additional locations planned in Nashville and Tuscaloosa, Alabama. The conversion of the Virgin Hotel marks a strategic move by Travel Plus Leisure to establish a presence in urban markets, traditionally less associated with timeshares, which are more common in resort destinations. The transformation is expected to be completed by late 2026, and the property will remain operational throughout the renovation. The hotel will offer flexible points-based ownership options, with sales slated to begin early next year. This development comes after the Virgin Hotel was sold in June to Accelerated Assets, a Michigan-based real estate firm known for converting residential and hospitality properties into timeshares. The sale price of approximately $77.4 million underscores the high value placed on the property, which boasts a landmark status as the world's first Virgin Hotel since its opening in 2015. The resort will feature a renovated lobby showcasing the energy of the Sports Illustrated brand, with sports-inspired design elements and imagery. Additional amenities will include a street-level coffee shop, a full-service restaurant, and a sports bar, aiming to capture the vibrant spirit of Chicago's sports culture. The plan is a collaboration between Travel Plus Leisure and Sports Hospitality Ventures, which licenses the Sports Illustrated brand from Authentic Brands Group. This move highlights a growing trend in the hospitality industry, where traditional hotels are being reimagined as themed resorts to attract a broader clientele. With Chicago's rich sports history and passionate fan base, the Sports Illustrated Resorts concept is poised to capitalize on these local cultural elements, offering a unique experience to both sports enthusiasts and travelers. The City of Ann Arbor has given the green light for a new development project involving the George apartment complex on Packard Street. This approval comes after a unanimous vote by the city's Planning Commission on Tuesday, September 16th. The project plans to add a 4-story building to the existing complex, which currently hosts 249 units. The expansion will introduce 46 new apartments and include ground-floor retail space, enhancing the mixed-use nature of the development. This move aligns with Ann Arbor's broader urban development goals, aiming to increase housing availability while integrating commercial spaces to support the local economy. The decision reflects a growing trend in urban planning to create more vibrant, livable communities by combining residential and retail elements. This model is particularly effective in cities like Ann Arbor, where there is a strong demand for both housing and commercial opportunities. In a broader context, such developments are part of a larger movement in North American cities to optimize urban spaces, making them more accommodating to diverse populations and economic activities. This strategy is mirrored in Canadian cities like Kitchener-Waterloo and Cambridge, Ontario, where similar mixed-use projects are being pursued to meet the needs of growing urban populations. These initiatives highlight the cross-border relevance of urban development strategies, as cities on both sides of the border strive to balance housing needs with commercial growth, fostering sustainable and economically robust communities. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.